Mike LaBella, Legg Mason launched 4 new ETFs in December, so let's check in on them. Starting off with the U.S. Diversified Core ETF. This is the UDBI. It's a smart beta fund, but I guess you weren't smart enough to launch it in mid-February when the market started turning up, right?
Well, you know, with launching these products at the end of December, it was actually a fantastic time to launch it because these strategies are really designed to help clients tackle market volatility. And that's certainly what we launched into. And I think you will see all 4 of these strategies have really performed above expectations for this market. The UDBI strategy really tackles diversification across industries. We know that sectors like the S&P 500 as an example can be highly concentrated, with financials as an example covering a very big portion. So what happens when financials is down nearly 20%? Well, the whole index goes down. This is a much more diversified strategy across those key industry drivers.
All right, well, next up is the DDBI, and this is the Legg Mason U.S. Diversified Core ETF. It's down around 5% year to date. So what's special about this one?
So this is another one where if investors want to go into international markets. Now, over the last 5 years, no one's wanted to own anything but the S&P 500, right? Because the U.S. has vastly outperformed the rest of the world. But over the long run, we know that's not sustainable. And that for investors to have proper equity diversification, they should have an international or even emerging market exposure. This opportunity gives them a more diversified international exposure. Again, looking at some of the more broad-based international exposures, you find out they're very highly concentrated. For example, the MSCI EFA index is nearly almost 50% in 2 countries, Japan and the UK. Is Abenomics going to work? I don't know. Is the UK going to vote itself out of the European Union in 3 months? The largest free trade zone in the world? I don't know. The better part is if you want international diversification, this is a better point to do it to diversify that country risk.
All right, next, you mentioned emerging markets is the EDBI. This is the Legg Mason Emerging Markets Diversified Core ETF. Why do you want to own emerging markets now, or you just want it for diversification?
So we are all about having emerging market allocation for strategic diversification input. But emerging markets have underperformed for the last 5 to 6 years by the widest margin since 1999. We see this asset class as an area where you totally can get opportunities. Now, with that said, based on the concentration of the index, BRICS plus a couple countries, almost 80%, it's not diversified. Is China going to do well? It's going to be a rocky boat, right? So we want to go into the index and really get more broad-based country diversification, and that's what EDBI does. If you look at the emerging market universe, every time you see a headline in the Wall Street Journal about China or commodities, you look at the screen and it's all red. But if you take a deeper look, there are places in Southeast Asia, there are places like Turkey that have held up really well in this market, and being better balanced across those different countries have ended up pretty good.
All right, and then finally is the LVHD. This is a dual mandate ETF. It's the Legg Mason Low Volatility High Dividend ETF. This one's a pretty timely one. It's trading nicely this year.
Absolutely. I mean, managed volatility strategies have been very popular in this particular market environment. But one of the top concerns about it in many of these managed vol funds is they're getting kind of expensive. If you look at the PEs on many of the managed vol funds out in the market right now, they're well above the market, up to 20, 22 on a PE times. If you look at LVHD, it's trading at a much lower multiple of around 14 to 15. The reason is that we mirror low volatility with income. So we take a look at quality metrics like consistent dividend payers, as well as profitability to make sure they can afford those dividends. And by doing that, we end up with a common sense portfolio to managing market vol. And year to date, it's done fantastic.
All right, well, thanks a lot, Mike.
Great. Thanks for having me.
Thank you for watching The Street.